So I'm now pulling up slides. I talked to David, who's going to be issuing comments, and I warned him that the slides and the paper are somewhat tenuously related, but hopefully my presentation will, in the end, make some sense, and I'll look forward to hearing comments on both what I talk about and then also on what I've written. I'm eager to get feedback on either. Okay, so the motivation for this paper is the development in the United States of a special purpose FinTech charter that so far doesn't have a lot of take up. And this special purpose FinTech charter would be given by the national banking regulator to financial institutions, provided that those institutions did not take deposits, but did offer financial services. It's a somewhat bipartisan initiative. It was developed during the Obama administration and then finally offered during the Trump administration. And the people who support it say things like it would possibly do something about the problem of shadow banking. So that's what Acting Controller Keith Nareka said, and the virtue of bringing banking technology-oriented financial companies that provide banking services out of the shadows. Or the current comptroller has said that it might offer new banking services and innovation in a way that might reach more customers and serve their needs better. So this is a plain sort of, these guys are offering financial services that people might want, and they're doing so in a way that people might prefer to the financial services offered by banks. Okay, so the FinTech charter has also been the subject of litigation. Lawsuits have been filed in the Southern District of New York and the District of Columbia. The Southern District of New York lawsuit was ultimately successful and has been appealed to the Second Circuit. That court will hear argument later this spring, if courts are still hearing arguments then, on whether this charter is legally well-founded. It's also, perhaps because of this litigation uncertainty, early days for the FinTech charter, which does not have any applicants yet. So I want to talk about FinTech chartering and introduce it with reference to bank chartering more generally, with a sort of turn away from techno-utopianism and a sense that there are, what's going on here looks to me like cautious regulatory innovation. And though I hope this paper doesn't entirely lack theory, I think there are two questions. One is a question of agency power, which is this the kind of thing that a banking agency ought to be able to offer to what are undoubtedly non-banks? Usually, the OCC has amended and extended its banking charter basically to let existing banks offer some sort of new, novel, non-banking services like credit cards or trust services. And here, OCC is saying, we're going to take institutions that aren't banks and give them a limited purpose federal charter. And I guess the question is that too different from its existing regulatory authority to be permitted, or is that an appropriate use of its authority? And then secondly, I think there's a sort of bigger question about what the boundaries of FinTech ought to be. People, Saleh, and in the first panel that I heard, have wondered about the role of big tech in offering financial technology. And that would be, I think, a real change in the way that banking is thought about, at least in the United States. If Google and Amazon get to do what Alibaba has done with Ant Financial, then we really are talking about a very different sort of incumbent, or I guess challenger in a sector which has generally in the United States separated commerce, which is what Amazon and Google represent, quite carefully from banking, which is something maybe we can talk about in the Q&A. Okay, and then secondly, there's a question about, you know, should these big technology companies or fintechs, is there enough competition for banking services in the United States? Or is that being constrained by the existing charter regime? Okay, I want to talk briefly about the chartering process, and then I'll move on to discuss the FinTech charter. Okay, so one of the things that's interesting about American de novo bank chartering is that it essentially came to an end in the wake of the financial crisis, where a number of the banks that failed were relatively young banks. And so though nobody made this public, OCC and the FDIC, the two agencies that need to approve a new bank, essentially stopped approving new banks. And for that reason, nobody applied to open a bank in the United States for just about a decade. That process is being changed, but you couldn't get, as you can see from this chart, a new bank charter. And you couldn't also, though the numbers are less stark, get into banking by buying the charter of an existing bank, sometimes a shell bank or a bank in decline, and trying to get into banking that way. So chartering basically ended in the United States, and it's worth noting that bank chartering is very different from corporate chartering. So you can get a corporate charter on your phone, probably during the course of my presentation, for a small amount of money from any Secretary of State in the country, and you can use that corporate charter to do any legal activity. But banks are different, and to obtain a bank charter, you have to pay a lot of money and go through a really rigorous process in order to do so. The OCC has a 100-page long manual that explains what it takes to get a bank charter from the OCC. And maybe we can see how complicated that is by looking at one particular American FinTech. This is an American FinTech that wanted to be a bank and an online-only bank, but it has applied for a bank charter. And we can see from its, and it recently won a conditional grant on that charter. And we can see some interesting things about the chartering process from the conditional grant. So one thing that I think is interesting is that this is a $100 million business. That's tiny by banking circumstances. And yet they hired pretty fancy lawyers to help them get the conditional approval to the bank charter so that they could open for business as a national bank. And when they got that preliminary approval, the approval is relatively concise. The bank is roughly described. The OCC says that it grants approval. There's a second stage to approval. Final approval is contingent on Varo meeting some capital obligations. And the OCC has said, it expects the $104 million will be raised in a way that Varo has explained it will do so. The OCC reviewed the people who would be running this bank and made sure that they were appropriate to serve as members of a bank. And then the OCC warned the would-be de novo online bank that it could change its mind and that it was now authorized to go forth and try to raise the money necessary to go into banking. And that's not the only thing that Varo has had to do. A de novo bank has to obtain deposit insurance from the FDIC. And Varo, last month became the first tech bank to win approval for FDIC insurance. The idea is, in short, that chartering is hard to do. It's not always clear what regulators are willing to permit and what they aren't. It's only the start of what, of course, I don't think anyone in the room would find this surprising, the start of a close relationship between the regulator and the entity. An ongoing relationship between Varo and OCC is contemplated. And then, of course, there's this question of, is it slightly too hard to get approval? Is there a problem with becoming a bank in the United States and offering novel services or competing with incumbent banks? Okay, now I want to talk about the FinTech charter. I see, I'll try not to go on too long. So as I suggested in the introduction, a FinTech charter is a potentially momentous change in the way that banking's done. So if PayPal, for example, could become, offer all the services that a bank ordinarily offers, that is potentially a real change in the way that financial institutions and the competitive landscape in banking would look. Or take Ant, the most valuable FinTech in the world, last valued at $150 billion, and essentially offering an end run to Chinese consumers around traditional banking. So Chinese banks are enormous and don't really serve Chinese consumers well. And it appears that the Chinese government has said, we're going to let Ant and Alibaba and WeChat, we're going to let them offer Chinese consumers the financial services they need, and the banks will continue making dodgy loans to government-sponsored enterprises and not really cater to consumers. And that's really different way to run a financial system than the way the United States runs one. But what I think we see in the way that OCC has thought about fintechs is that it's really quite conservative. And I want to suggest that this reflects a traditional kind of conservatism on the part of OCC. And then also by limiting fintechs to non-depository institutions, a way of limiting the kind of universe that would be open to obtaining a fintech charter. And so, like I said, I think this is a practically conservative approach. Okay, so American fintechs, what they do now if they want to offer banking services is they rent a bank to provide those financial services, the banking services, and they basically market those financial services on the internet. So the bank briefly touches every sort of banking type transaction that these fintechs want to offer, and then the fintechs take them back, and that's how fintechs do get involved in the business of banking. This relationship is a little costly and a little weird. And so a number of fintechs, and I apologize for the quality of this chart, have explored ways that they might get out of banking. Interestingly, Lending Club, a personal loan, a peer-to-peer lender, bought a bank, so they engaged in a sort of charter conversion, or tried to. It's going to take no less than a year for that charter to close, so it's really, really hard to buy your way into the business of banking, but Lending Club's going to try to do it. Or there's partnerships with industrial loan companies, or Nelnet, a student loan servicer, obtained an industrial loan company license, but then failed to get deposit insurance, so it still is renting a bank to provide banking services. There's a variety of different licenses you could get from New York State, and fintechs have explored that. Robinhood tried to get a national bank charter like Varo did and failed to get it. Varo looks like it got that charter. We'll see if it can open for business without using its rent-a-bank, but it might try. And then sometimes, banking holding companies have launched their own fintech arms, in which case they can rely on the federal charter they already have. Okay, so what do you get when you get a federal charter? You get to engage in the business of banking, which is a constantly redefined business, but includes a number of different things you can do, including, offer safe deposit boxes, take deposits, make loans, and do checking accounts. And OCC eventually put together a fintech license on how it would evaluate charter applications from financial technology companies. Again, it's quite lengthy. And then it announced that it would accept applications. And again, it hasn't received applications, or at least the last I checked, I hadn't seen any applications that it had seen. And I think that one of the reasons why this process has gone on so long and taken such a number of years to get off the ground and still is going so slowly is because the OCC is very conservative about these special purpose charters. So its current regulation that it operates under was created in 2003. And there are reasons why a fintech might want an OCC charter. They're expensive, but they offer national preemption and take away the requirement that you have to get state-by-state licenses, money transmission licenses, and that might be attractive. But when OCC said, we're going to create special purpose banks that offer credit cards, only 9 financial institutions have taken OCC up on its offer. What about trust company services? Can we create a trust company bank? Well, there's only 55 of those. OCC said during the last financial crisis, it would offer a shelf charter. So it would get investors ready to take over a failing bank. And only 2 of those were ever taken off the shelf. And bankers' banks and nationally chartered community developed banks, there's not much going on with OCC when it comes to the creation of idiosyncratic banks. So that suggests that OCC is very cautious. And nonetheless, OCC has lost at least one round in its effort to offer the national charter to fintechs. And I guess I'm not sure I agree with the story that OCC shouldn't be able to offer a national fintech charter. That lawsuit said that the problem with the OCC's fintech charter is it said that fintechs can get national banking licenses as long as they don't take deposits. And a court in New York said, but a bank is by definition something that must take deposits. And so if you create something that doesn't take deposits, then it's not a bank. And I call that deposit essentialism. You know, I'm not sure that a credit card bank really takes deposits as opposed to just offering credit card services. Trust companies sort of take deposits, but arguably they just hold collateral for people who want to use those trust services. And so it's not clear to me that deposits are what a bank essentially is. And I think that that's a bad way of thinking about what a bank is. And then secondly, you know, I think it's pretty clear that the business of banking is an ambiguous term. The Supreme Court suggested as much when it allowed OCC to let banks sell annuities. And it's also the case that even if deposits are one of the things that banks can offer, it's okay not to let banks offer every activity that are permitted in the business of banking. And the DC Circuit held that in 1987. I already told you about trust banks, and I already told you about credit card banks. And so that's why I think that OCC's charter maybe isn't such a bad idea after all, that we can rely on a track record of conservatism and a relatively flexible legal environment, and conclude that maybe it ought to be allowed to experiment in this space. Okay, so what does this mean? What is my paper all about? Sometimes I worry that this is a sort of description that sort of lacks a little sort of heft. But it seems to me that OCC's cautious approach to fintechs is a good thing and legally appropriate. And one of the things that that cautious approach implies is that, you know, Amazon shouldn't be allowed to create an American Ant Financial, and Google, Apple, and Facebook shouldn't be able to turn their wallets into financial institutions that offer all kinds of banking services. And I think that that is probably the right way to think about what these big tech firms could do in the fintech space. Because if they were allowed to offer all the services that Ant does offer Chinese consumers, I think that would end the separation of banking and commerce. And I think that that is something that maybe something we'd want to do, but we'd want to have Congress weigh in on that rather than one single regulator. Or even two if deposit insurance was required. So fintech chartering doesn't solve this new entrant problem, given the fintechs that have looked into chartering. They're small startups and they don't look like they disrupt JP Morgan or whatever, but maybe that would be new business models and maybe that's a good thing. So that's my turn away from techno-utopianism, and I'll look forward to your questions and David's comments.
Great, thank you, David. That was super interesting. I now hand over to the other David, David Ramos Muñoz, who is a professor at the University of Carlos III in Madrid. I understand Madrid is one of the epicenters of the corona crisis, so I'm glad to see you healthy and alive here. David, we look forward to your comments.
Thank you very much. Please, first of all, Georg, can you confirm that you can see me and that you can see my screen?
Yes, perfect.
Thank you very much. Okay, so thanks a lot for the thoughts. It's 2 weeks of confinement now, so I'm kind of wearing a tie as a sort of mental sanity practice. But having said that, everything is pretty well so far. Thank you very much, David, for a really interesting presentation, a really interesting paper. As I exchanged an email to you, and I said that I like the paper a lot. I think it touches upon very interesting issues. So it's not that I have many things to say. I'm going to focus on some comments related to the paper and its content itself, and then take a pull from the thread of the constitutionality of what of the OCC is doing. So first of all, the paper contribution, I think, has the merit of focusing on an actual regulatory initiative that is ongoing. And it focuses on regulatory issues, industry structure issues, but also raises constitutional issues. And I always welcome that, because it kind of goes out of a comfort zone of trying to get into the very specific, very specialized, very niche issues. I think that this matter has implications beyond FinTech, and that's why I find it super interesting. Of course, it has the risk that the issue is a moving target. So if in some months, the circuit court overturns what the district court says, then that requires a little bit of readjustment of the arguments. Maybe new arguments will come into play. But of course, that's always the risk when focus is on ongoing initiatives. In terms of message and substance, I think that I enjoyed the presentation very much. I enjoyed the paper very much. I would say that the message in the presentation read a little bit more clearly to me, because it was a little bit more linear. You described the initiative, then you said, is it desirable or not? And should the OCC be able to do that or not? And that kind of sits well as a matter of logic. I mean, if I had any suggestion, because of course you are the expert, I would perhaps suggest thinking about this kind of structure for the paper as well, but that's just an idea. In terms of substance, one idea, please take this, of course, as with a pinch of salt, would be to expand the arguments on why may it be desirable, why the OCC FinTech Charter may be desirable, as opposed to letting states charter fintechs. And of course, you could contrast different arguments, the argument on regulatory competition and experimentation versus the argument of regulatory harmonization, diversity versus financial stability, especially if we are talking about big techs potentially benefiting from this. Proximity, especially when we talk about consumer protection versus the possibility of fintechs of reaching scale that are provided by a federal charter, preempting state regulation, and the clarity of a uniform framework all across the United States. In that sense, I think it would be useful, it would strengthen your argument in favor of the OCC position if you expanded a little bit more on what New York, why New York objects. Because at the end of the day, maybe the arguments of New York are less convincing, but they are not illegitimate. They say, we have built a strong, comprehensive background for fintechs, and now the OCC is somehow trying to take this away by creating this federal charter. And I think that would strengthen the message of the paper as well. As to the points of constitutionality, which are the ones I wanted to expand a little bit more, I think that it's important to differentiate whether the OCC initiative is desirable for the structure of the industry from whether it is constitutionally feasible. Meaning that whether the OCC has the power to do that, considering the statutory framework applicable. One minor question that arose when I was reading the paper and also the court ruling by the District Court of New York is that the standard of deference is always discussed in relation to Chevron, the case Chevron versus natural resources. There's also the standard of deference of Auer, which applies when an agency is interpreting its own regulations. And in this case, I mean, as far as I could understand it, I think the OCC amended its regulations in a way it considers it's compatible with the statutory framework. Which then that would be a Chevron issue, but then is ready to interpret that regulation to grant charters to fintechs, which in itself would be an interpretation of its own regulations and would be subject to a standard of reference covered by different case law. So that's perhaps a minor point, but one worth exploring. the more important one is that the case law that that you refer to in the paper analyzes the issue of agency power and the deference granted to agency interpretations. What I find interesting is that the different cases not only concern the issue of agency deference, they also concern different statutory frameworks. Some of the cases concern the definition of banking, that but in the context of Glass-Steagall restrictions, so that the business of banking was a constraint on what a bank could do, and what bank regulators could actually regulate, because banks were prohibited from engaging in securities or investment activities, and in that sense, of course, some cases grant deference to the agencies, such as Nations Bank versus VALIC, to which you refer to, but some others are less deferential, like Federal Reserve Board versus Dimension Financial, which, for example, refers to the Federal Reserve Board attempt to regulate non-bank banks. It is an 86 case, and there the Supreme Court was a lot less deferential because it was considering that the FRB was trying to get more competencies. It was conflicted in its interpretation because it was assuming more competencies than it was than it should have. Other cases are decided in the context of the McFadden Act or on branching restrictions, and some of them again are more differential, but some of them were also less so. It would be interesting to see if you know, now I would say that the courts are inclined to be deferential, but it is important not to ignore the also extensive body of case law that is less deferential to what an agency can or cannot do. And this brings me, I mean, putting this into the context of the actual statutes that constituted the background for the interpretation of the agency deference, brings me to the last point, because that gives two arguments for the OCC position and also for the paper's position that the OCC should be able to do this. One is that the acts that constituted the background of the major case law on the interpretation of the business of banking contain restrictions that have been derogated. Glass-Steagall restrictions as well as McFadden restrictions have been derogated. So you could make the case that there's no need for a restrictive interpretation of banking anymore. So that's one argument. Plus the very long and extensive case law on what a bank does and what a bank is belies the District Court of New York's view that it is very clear that a bank has to offer deposits. So that would be another argument in favor of your position. However, one cannot ignore either the fact that the Chevron standard of deference has been constrained and a lot of nuances are being introduced. And notably, because I don't want to overextend myself, in the case law of King versus Burwell, as well as Barnhart versus Wharton, the Supreme Court said more or less that deference is not a rule, it is a presumption. And under certain circumstances, the presumption may be the opposite, meaning that non-deference to the agency interpretation. And that contrary presumption to towards agency deference, meaning non-deference, depends on whether the issue is interstitial or a major question. If the question is a major one, then one cannot presume that we should grant deference to the agency interpretation. And this is, I think, where the constitutional debate and the desirability debate converge, because it offers you an interesting opportunity to explore whether this is a major constitutional issue or a major issue for the structure of the statute, as long as it affects the sector's competitive structure, the federal versus state competitive equality, whether this is a principle that has survived the derogation of the McFadden Act, and whether consumer protection may be an issue that turns the interpretation of the OCC into a major question that affects the statutory structure and the structure of the market, and therefore wouldn't be subject to agency deference, and we would have to seek different principles to justify it. I apologize if I overextended myself. I thank you all very much.
Excellent. Thank you, David. Thanks to both Davids for a stimulating debate. The others,
and I really appreciate them. One of the things I'll just talk about two things. One is sort of the sort of Chevron question, and then a little bit about regulatory harmonization versus regulatory experimentation. So I'm sort of on record of liking a sort of harmonized approach to various kinds of financial regulation. But you know, one of the defenses to the OCC charter that might exist out here is it is being offered within the context of the dual system. So you do have these emerging state fintech licenses, and they're not emerging too quickly, to be sure. But maybe OCC's own approach to fintech licensing can offer a sort of competitive alternative to the emerging sort of New York State rules, and maybe that's going to improve both. It's not totally clear. I'll also say that I think there may be an international relations component to why OCC wants to offer a federal charter, that as we've heard in other presentations, fintech regulation is advanced in different ways in other jurisdictions, and there may be a sense that the OCC needs to or wants to keep up. I really enjoy the points about Chevron, and one of the things I think that's really interesting about this application is it's not totally clear what kind of deference it should receive, because OCC took forever to put this together and took a number of rounds of comment, and so it looks like a very authoritative statement. But it is interpreting its own regulation, which makes our deference appropriate, as David sort of says, and it didn't publish its sort of rule in the Federal Register. Instead, it just offered this manual, and that's just a really weird question. The OCC spoke with a ton of formality, which people like Justice Breyer might like in Barnhart, and maybe didn't go through the sort of canonical notice and comment rulemaking, which definitely receives Chevron deference, as David observes, and that's just sort of an interesting thing to think about. And I also appreciate the thought about whether this is an interstitial or major question, because as I said in the beginning of my remarks, on the one hand, these are small-time businesses that want to get a license, but on the other hand, they're different. They're not incumbent banks trying to offer new services. These are non-banks trying to offer banking services, and that makes things look a little bit more major than it otherwise would. With that, I would love to hear questions, so I won't go any further.